right now want to switch the markets. The session, it really seemed doomed before the opening bell. When the Dow did open, it was down 180 points. And the big question was just how much would we be down today? But then we slowly began to turn around. The initial spark came from a better than expected data on manufacturing. That data, by the way, it's interesting because it was riddled with warnings about the trade skirmish, and nevertheless, the data itself blew away Wall Street's estimates. I think this really underscores the reality of this super strong economy against the angst of what could happen. Now, other worries for investors, recession signals, the wayward Fed, and why bank stocks continue to get hammered. I want to ask Veronica Dagher, Wall Street Journal columnist and also host of the Secrets of Wealthy Women podcast, and Danielle DiMartino Booth, former Dallas Fed advisor and Quill Intelligence CEO. Danielle, let me start with you because you've talked a lot about the banks, and of course you were with the Fed, and that's my only worry. I'm not too worried about anything else, honestly, but I do wonder why the banks are underperforming so badly, and if that's some sort of harbinger of things to come for the economy.
Well, look, as you know, I follow the yield curve very closely. I know it's not a popular subject to bring up, the difference between the short end and the long end of the yield curve. But today we saw that differential drop to the lowest level of the current cycle. It's 30 basis points. That's 0.3 of 1 percentage point. It's got to have the Fed worried, and it's showing up in banks' performance because banks have to have a nice wide differential between where they borrow and where they lend in order to make a profit. And that is why we're seeing, I think, such weakness in the banking sector right now, Charles.
The banks have been sort of underperforming and disappointing all year long, right? And they were supposed to do well this year because the Fed is hiking rates. And then you just went through this stress test, which I think personally is a joke, but they passed. A lot of them got a chance to put out these enormous dividends and buybacks. And, you know, they were up today, but there's something wrong there. And essentially what you're saying is that this yield, the inversion with the yield is a great indicator of recession. Are we really talking about recession being that close right now, right around the corner?
You know, I am concerned. You're starting to see the household sector start to hit the panic button. We shouldn't be seeing delinquencies where they are right now, Charles, given how strong the underlying economy is. And you mentioned earlier kind of the details in the manufacturing report that came out this morning. Well, 18 out of 18 industries, that's 100% of industries, reported that they're choking on higher costs, and that's up from what we've seen over the past 4 months.
Right.
You know, my greatest concern is that at some point, if your profit margins are squeezed to too great of an extent, you're a great veteran of this market, Charles. You know exactly what happens if companies can no longer cut costs to a great enough extent. Layoffs inevitably follow.
Veronica, what are your main concerns watching this market? Because there are a lot of things that are gnawing at investors right now.
There's a lot of things gnawing at investors. I think a big thing that we're going to hear more and more about is this whole inflation argument. Are we running too hot? What is the Fed going to do? And are they going to eventually bumble what they need to do? And also, we're seeing this in the consumer sentiment numbers, too. Regular folks, mom and pop on Main Street, are starting to get clued in and are starting to get worried about some of this trade talk. What does this mean for me? People in America know that free trade means lots of goods, better chance of cheaper prices for those goods. They like that. And so some of this threat of trade war is making some folks nervous, and we're seeing that reflected in the numbers. Generally speaking, though, consumer spending is great. Business spending, government spending are all in really positive places right now. However, it may not take that much to change that.
Those are the ironies. Everyone's talking about certain things, and there's a certain amount of anxiety, but by the same token, a lot of the other things that are actual, developments are pretty strong right now.
Right, exactly.
Okay,
Corporate
ladies,
earnings.
thank you both very much. Appreciate it.